Hello everyone, welcome to the market snapshots for today. So overall, I think the markets are fine, both the Indian markets and the US market. It is just that I would say, if we look at last 3 4 weeks, what was happening is, however bad of a Thursday used to be for Indian markets, somehow they were able to pull off the Friday and they would close uh, better. They would close stronger, and that would make the markets remain in that momentum which the Indian markets have gained since maybe April, May. Whereas what was happening in the US market, I think US markets were closing slightly weaker. I mean, however strong the Thursdays used to be, the Fridays used to be very, very bad. But I think that is one thing which has changed in the US market. The close yesterday was very, very strong in the US market, and the Indian markets are very stable. And let's look at the numbers. Nifty closed at 24,570. Nifty 500 23,712, and Nasdaq was down up by almost 1.19% at 29,722, and S&P 500 is also up by almost 0.6% at 7757. This is Nifty 500. The advances were 217 to declines of 283. So not a very strong number, but the good part is it has not deteriorated significantly. So that is the reason I still like these numbers. They're nothing significant, but I think I'm still fine with them. A new high is 14 to new lows of 4886. So this is where if you see these numbers just don't increase in the Indian markets. If you look at the indexes, you look at Nifty 50, Nifty 500, Nifty 200, Nifty IPO, Nifty micro cap, small cap, in most cases they are trading near all-time highs, but the problem is, the new highs in stocks are not getting formed, and that is the reason we keep having a lot of volatility. We see certain rise, then sudden falls in the market, and that is because of external pressure. Overall, if I look the Indian market in isolation, they look very, very good to me, but I think there is a lot of external pressure, not in terms of some country, but majorly from the US, because of, maybe it is because of the tariffs, it is because of the crude, or it is because of the dollar. So that is the reason we don't see a lot of new highs happening, but I'm sure that will change because the markets are literally trading at near almost their all-time highs. The breadth is also the good. See, the thing is, I think the breadth in India for sure has not improved for the entire month of July and now almost first week of August. But the good part is that it is not deteriorating. Somehow, just stands there, doesn't gives you much, doesn't moves, doesn't falls, just keep hovering around those levels in terms of breadth. So I think that is also good. While the markets have been so volatile, at least we don't, if we don't rise, we don't fall apart as well. Now look at this chart. Nifty 50, a strong looking chart. I mean, very, very good sessions from like last 8 10 sessions. Now also structurally very strong looking chart. Last 2 3 sessions, there has been little sell off, but that is bound to happen because the markets have risen almost 6 7%, and it cannot go in a straight line. So overall Nifty 50 looks strong, and I think majorly a lot of strength or momentum is getting into larger caps or towards defensive sectors. So I mean, I'm like really bullish on Nifty 50, Nifty 200, Nifty 500. I'm sure these are the indexes which will be to watch out for. Earlier, when the shift in momentum happened in the Indian markets, the initial rally was, I mean, a lot of strength was in the small caps, micro caps, but somehow that seems to be deteriorating. And I think the way numbers are coming for the entire month of July, I just feel the strength will lie with the mid caps and the larger caps. It might not be with the smaller caps for sure, because the deterioration keeps happening. It is not that it has stopped or it is just trying to remain where it is. I think there is a lot of deterioration which is happening on the data front in those indexes, and that is the reason, I think for me, for the Indian markets, the watch out would be Nifty 50, Nifty 200, Nifty 500. Nifty 500, again a very strong looking chart, trading almost at its highest level of all time high. The data has been supportive. Like I said, I mean, Indian market in isolation, they look good. It is just that because of external pressure, somehow we have not been able to see the follow throughs or the breakouts which we were anticipating. But I think matter of time, I think the Indian markets will do well. That is what I anticipate or I feel with regards to charts and the data which I have. The overall summary from the Indian market, the Nifty 50 looks bullish above 50 MA. The participation is weak, the breadth here is strong. So this is the point of worry. This is what I was telling. What happens because of this external pressure, the participation, it just falls apart, right? I mean, deterioration was fine, but then when it falls apart, it gives a lot of volatility, and for investors, to gain that kind of confidence in such a volatile market, it is very difficult. And that is the reason, the Indian markets, although they are trading near all-time high, they are just still struggling because of external pressure. Nifty 500, similar story, bullish. The participation has been mixed and the breadth has been strong. So overall for the Indian markets, I would still say, if you are having positions, just keep holding them. I mean, everything's good. If at all you want to enter now, I think you should have an exposure of around 50 to 75%. The reason being, so unwanted volatility comes in. So I mean, and that cannot be anticipated. That happens purely on external factors. If it was, based on Indian things, we could have just anticipated. But then, because it is so much external, that if you go all in and just imagine, stocks start going down, all your stops getting hit. So a lot of, you'll literally find yourself off guard. And that is the reason I'm saying, if you are a new entrant, look for an exposure of not more than 50 to 75%. If you're holding on to your position, just keep holding them. There's no point of worry. uh, this is S&P 500, one of the best looking indexes at this point of time. The advance is very strong of 325 to declines of 175. That's what I'm saying. The US markets, after 3 4 weeks or maybe 5 weeks, have closed strong, which is a very very good sign for the US markets. The new high 16 against new lows of 484. The breadth looks very strong. I mean, very very strong breadth above 20 EMA 323 stocks, above 50 EMA 331 stocks, above 200 EMA 359 stocks. The chart structure, this is Nasdaq 100, bullish looking chart, has reclaimed 50 MA, doing everything fine about itself. The rise is not in the air. A lot of that data supports this rise, so pretty bullish. But then again, we'll have to wait and watch what happens at these levels, which might be a resistance to Nasdaq 100. But overall, a good looking chart. The numbers are supportive of the rise, so good going there. You can have exposures in the Nasdaq 100. This is my favorite index at this point of time. This is S&P 500, a strong looking chart, trading at its all-time high. The numbers have never left its rise. I mean, the numbers have been very very supportive of this rise. So I really like this chart. This is where my maximum exposure in the US market would be, and this is what maybe I would suggest, that you should, literally look into S&P 500 sectorally, and that would be beneficial. Russell 2000, again, like, trading at its all-time high. The numbers have started supporting. So overall, I think for the US market, like, it really struggled for the month of July, but somehow, it has regained its strength. And the reason could be a dollar has started falling. Like I have been telling you this, a lot of people believe a rising dollar is just a negative sentiment for overall market except US, but that is not the case. A rising dollar is bad for everyone, be it the US itself. And since that has started falling, that has been the, one of the reasons why the US markets have started, reclaiming their levels and started doing better. So overall from the US markets, my takeaway would be, I would still keep my most exposure in S&P 500 rather than being into Nasdaq 100 or Russell 2000, just because, these two indexes have started doing well in last maybe this week. But S&P, I think for me, I mean, I think it never went off guard. It has been there, very sustainable, very consistent, and that is the reason where my maximum bet would be. Again, for the US market, if you're a new entrant, don't your exposure should not be more than 50 to 75%. If you're holding on to positions, just continue holding them. That's well and good. Overall, the summary for the US market, everything thing looks green. I mean, it is bullish. Nasdaq 100 is bullish. Participation is a strong. Breadth is a strong. S&P 500 bullish. Participation is strong. Breadth is strong. Russell 2000 bullish. Participation is strong and breadth is strong. Like I said, like in this is after maybe 4 to 6 weeks, I am seeing like the US markets on a Friday has closed well, which is a good sign, because normally what would happen, whatever gains maybe Nasdaq or a Russell 2000 or S&P would make during the week, they would eventually get sold off during the last session of on Friday. But this week it has sustained, so I think I really like this. That for sure gives us a signal that things might turn for better in the coming few weeks. So, what is fueling the rise of equities, be it in the Indian market and the US market? For sure, the falling dollar is helping us. I'm 100% sure about it. At the same time, uh, see, uh, 10-year yield at 4.64, I think honestly it is a point of worry, and that is the reason I'm telling you that if you are making a new exposure, you should not go all in, because see, that needs to come down. Although it has come down, I think the highest it made was at around 4.78, and it has come down to 4.64. For sure it has fallen, but the structure looks very strong. It looks a very bullish, and if that keeps rising, that will affect the equities for sure. So that is the reason I'm still not in favor of getting into 100% exposure if you're a new entrant, because the fall of dollar has been helpful, but then we definitely want the yields also to fall. VIX at 14.90 doesn't indicate much. BTC, I think, is forming a good base. I think very soon we should see some momentum in BTC. That is what at least I can make out. Gold is doing absolutely well, absolutely well. Look for opportunities in short term, long term, both the points, because gold is looking really good now. It has already breached that level, that the resistance it was facing at around 3950 to 4000, 4050, 4100. That has already gone. I mean, it is doing well. Look for opportunities which can be in the form of short term, medium term to long term. Gold is looking really really good, and gold is not something which maybe like only private equities or institutions buy. I mean, I think a lot of central banks are also involved in the buying of gold. So any rally which happens, be it a breakout or a breakdown in gold, it is not something which should be taken in thin air. You can definitely look for opportunities in gold. So overall, dollar, like I said, I mean, this is something which has fueled the rise of the equities market, be it in India, be it US, and we definitely want this to go down further, which will eventually help us a lot in the equities market. Like I said, Bitcoin has been forming a base, and it is looking a good base. Let's see. I think something should happen, and like I have been telling, Bitcoin is a great indicator to tell you the market sentiments. And if at all the breakout happens in Bitcoin, you can expect a lot of movement in the equities market too. So maybe all this is together fueling up the rise. uh, and this is gold, very very good looking chart. I mean, just look for opportunities. Maybe if you could have drawn a trend line here, this breakout you could have captured. At the same time, you will get ample of opportunities here around about this level. I think around 4300 to 4400, you might see gold basing, and during that base formation you can look for opportunities if you are looking to hold it positionally. And if you're looking for short term, I think there will be ample of opportunities in gold. So overall, what is happening in the US market or the Indian markets? I think these sectors are not changing in either market. So like I have been telling, with regards to Indian market, although the rise started with the small caps, micro caps, but I think now it is significantly moving towards more stable, defensive sectors like auto, health, consumer durables in India, and very similar story for the US market, financial, health, and energy. It is no more small caps or micro caps for India, and it is no more semiconductors or AI in the US market. So The major sentiments have diversified now. I don't think, I mean, it is concentrated to any specific domain or sector. The institutional money or liquidity is flowing towards more stable sectors, which really drive the economy. So have that in your mind whenever you are looking to invest or trade. So for me, this week, the strongest looking chart both from the Indian markets and the US markets. From the Indian markets, it is Lloyd's, Bharat Forge, Loris Lab, RK Forge, Oro Pharma, and from the US market, it is SATS, TD, TTD, CGSP, Coin, and PODDD. So that's everything from my side. I mean, what I will say is, a new, if you are a new entrant, make sure not to have an exposure of more than 50 to 75% in both the markets. Try and get into sectors which are more stable, which really drive the economy, health, reality, finance, uh, auto, energy, finance. So these kind of sectors you should be focusing in both the markets, because I think that is where a lot of liquidation is happening. In terms of Bitcoin, I think it is basing. I won't say you should look for making positions at this point of time, but I think it is a time when you should have Bitcoin in your watch list, because I think it is basing at a very good level. Gold will give you opportunities in almost every time frame you are looking for. That's a watch out. So I think you can trade in gold, you can keep Bitcoin in watch list, and look for defensive sectors in both Indian markets and the US markets for your equity positions. That's all from my side. I hope you all found this useful. Thank you so much and see you next time. Have a good one.